All right, hello everybody. Welcome to this UFile Live. So we're here to answer any tax questions that you might have. So ask away. I'll get the ball rolling and talk about and talk about certain benefits that came about just recently, certain developments that came about just recently. More specifically, we're talking about, for example, the Canada Emergency Response Benefit. So this was a major announcement. But before I get into the announcement, let me just make sure that all of you are safe and sound right now who are currently viewing this live stream. Okay, so please follow the directives of your government officials. Okay, whether it's provincial, municipal, or federal, please follow the directives. I hope that you guys are viewing this safely and comfortably from your home, and that you stay safely and comfortably in your homes. Okay, so please. So hopefully we can answer a few questions for you today. So we could answer a few questions for you today. So let me get the ball rolling, and let's talk about. Let's talk about the Canada Emergency Response Benefit. Let's talk about that. Okay, so that's the big major announcement that came about recently, which is essentially a new benefit, an employment insurance benefit, essentially. So let me just check something because I think some people might be having problems viewing my screen. Sorry, and this is live. This is what happens. So let's go in there. So yeah, I am live. So I could see myself right now. Okay, so let's talk about again the kind of emergency response benefit. So this is a new employment insurance benefit, okay, that was announced by the government to help those who have lost their jobs, who have lost their livelihood and their income due to the coronavirus pandemic. Okay, so how's this going to work? So I mean, this benefit essentially, this ERB is going to be a $2,000 per month benefit. Okay, for up to 4 months for workers who essentially lose their jobs and lose their income as a result of the coronavirus, coronavirus pandemic. Okay, so who would be eligible for this type of benefit? Remember, it's an employment insurance benefit. So essentially, essentially. So essentially, the people who can claim the benefit are people who have lost their jobs. Okay, people have lost their jobs due to the coronavirus pandemic, and this is retroactive up until the 15th of March, essentially. And you also, for 2019, and within the last 12 months, preceding the application that you make for the CERB or the Canada Emergency Response Benefit, you have to have gained at least $5,000 of employment, self-employment, employment insurance, or parental benefits. So you have to have at least $5,000 of that type of income, and that's combined, right? It doesn't have to be individually, it's just combined. Okay? You have to also be unemployed for at least 14 consecutive days, okay, within a 4-week period. All right, so in order to be able to apply for the benefit. Okay, now the benefit is taxable though. Just mind you that the benefit is taxable as well. You will have to include it in your income for 2020. Not for the tax season right now. We're still dealing with 2019. You'll have to include it for your 2020 return. Okay, so it will be a taxable benefit. It is the taxable income on your return. Now, how can you apply? Well, the application opened up already as of April 6th, and from what I've read from the news items out there, a lot of people who applied for the benefit are already receiving it within a couple of days. So that's great news. Okay, so there's nothing to prevent you right now from applying. You could apply either through the CRA My Account portal, or you can go to the My Service Canada account portal, which, to be honest with you, you're better off going to My Service Account. It is more of an employment insurance benefit, and they're the ones who handle that benefit. So that's what that's what I would recommend. So if you go to My Service Account, go ahead, make the application. It doesn't take a lot to apply and to get accepted. Okay, so if you fall into one of these criteria where you've lost your job due to COVID, you've made at least $5,000 of employment income, self-employment, etc., in 2019 or 12 months before making the application, nothing's stopping you from doing it. Please do it. It is there to help you. Okay, so that's one of the Okay, so now I think I see some of the questions here. To be eligible for the requirements, expect to be without income. Okay, so to be eligible, um, okay, so to be eligible for the CRB, one of the requirements that we are or expect to be, and this is from Lo Ming, 14 consecutive days in initial 4-week period. For subsequent periods, they expect to have no employment or self-employment. Absolutely, yes. Again, now we're going into the minutia here of the CRB. I'm just going to the basic criteria of what it is. My question is, if within 14 days, if within the 14-day period we get offered a job, are we put in a difficult position, i.e. we have to choose between accepting the job for less than $100 or waiting for the $2,000 a month CRB? True. Remember, this is made for people who have essentially lost their job. I mean, who are not collecting any income right now from work. So if you find work in the meantime and you get back into the job market, if you get back into work, then at that point, yes, the CRB would be cut at that point. Again, it's made for people who essentially have lost their jobs, okay, who are not getting any income whatsoever because of COVID. So absolutely, that's something that you would have to consider. I've mistakenly contributed too much to my RSP. So this is from Ben. So let's see. I've mistakenly contributed too much to my RSP. I made an overcontribution in February 2020. Can you tell me what my options are? Thank you. Yes. What you can do is you can go back to your financial institution and you could ask for what's called a refund of excess contributions. Okay? That's what you could ask for. All right? So what that means is you're essentially canceling your contribution. Okay? So it's a special form that is provided by your financial institution and by the CRA, essentially. Okay, it's a special form from them, okay, that allows you to essentially cancel. But you have a deadline to do this, okay? If you did it in February, if memory serves me, you got about 90 days to produce this form and to cancel your contribution without any tax consequences, essentially, okay? So that's essentially, how that works. All right. Hi, if I'm stay, okay. So Sue, can someone receiving a small pension apply? Well, Sue, I'm assuming you're saying the CRB. Remember, Sue, you have to show that you worked, and that you have at least $5,000 of income. So yeah, the pension income should not stop anything as far as the CRB, but you have to show that you've been unemployed for at least 14 days. And that you made at least $5,000 of income, whether it's employment or self-employment. That's what you need to prove to the CRA. Not the CRA, sorry, to Service Canada. So a small pension income is not going to make the difference, okay? What it's there for is to replace your employment income. So as long as you meet the criteria that I mentioned before, which is you were unemployed for 14 days, you made at least $5,000, employment, self-employment in 2019 or within 12 months of application, then yes, you're allowed the CRB at that point. Can you declare funeral expenses? The answer is no. It doesn't look like it, at least not with the CRB. It doesn't look like it tax-wise. You really can't. I mean, there's really nothing. There's nothing in the Tax Act that stipulates that you can claim funeral expenses as far as anything on the tax return. So that at least that I'm aware of off the top of my head. Okay, so my mother babysit my son occasionally. I did pay her some dollars for her to buy some supplies, snacks for my son. Can I declare that child expense both for Canada and Quebec? The answer is yes, but you would have to provide the SIN number of your mother on the child care expenses form, especially in Quebec. In Quebec, they will ask for the SIN number. You can't net file the return. You can't electronically transmit the return unless you have the SIN number of the person providing the child care. And of course, your mom would have to declare that as income, okay, as taxable income on her return. Okay, so that's essentially how that would work. Okay, so Trish was replying to Ben saying you can also overcontribute by $2,000 without penalty, correct? Yes. You can carry forward $2,000 in excess continuously until the year that you turn 71. And why that year is special, that year that you turn 71, is because that's when you have to convert your RSP into a RIF. And that's when you have to actually start cashing in your RSP account, which is now a RIF account. Okay, so yes, you can overcontribute by 2,000, but I didn't have those details by band. So the options are, if it's within 2,000, you're okay, but if it's beyond 2,000, you have to do the refund of excess contributions. And that your financial institution should know this offhand. If you say it exactly the way I just mentioned it now in the session, they should know. Okay, they should know what to do. All right, so thank you, Trish, for the extra tidbit. Actually, it is very poignant. You're absolutely right. So Carl, I filed my 2019 taxes through UFile to CRA and have since received another tax receipt. Can I adjust my already filed tax return through the UFile platform? The answer is yes. So when you go to the interview setup in UFile, which is the left-hand menu, and the interview setup, of course, is where you choose the sections that are relevant to your return. There should be an option towards the bottom for adjusting a tax return. So you tick that box. You click next, and then all the way at the bottom of your left-hand menu of the interview screen, you should see a section there for an adjustment. Okay, and the program will, and then from there you can fill in what's called the T180J. Okay, that's the adjustment form that you would need to submit to the CRA, and it's by mail, unfortunately. If you do it that way, you have to mail it in, and it takes a while before they process. And then you simply complete that form. Now, another way you could do this in a faster way is by going through My Account. If you have, if you're signed up to My Account with the CRA, which is the online portal of the Canada Revenue Agency, you could also produce adjustments online and submit them online as well. That's another way you could do it, and it's a lot faster doing it that way. Okay, unfortunately, the CRA does not allow software developers like us, like UFile, to produce the online what's called adjustments. So at that point, you could go online directly to the CRA My Account portal. It's very easy to sign up. It takes about a day, and you could and your login credentials are the same as your financial institution. So you could simply choose your financial institution for your login credentials, and you simply go in and you do your adjustment online. Okay, let's keep going. Okay, so Ban said it was 4,500. So yeah, Ban, you have to do a refund of excess contributions. That answers that question right there. Michael, I bought and moved into a new condo this year. Do I need to do anything different on my taxes this year? The answer, and this is, by the way, the answer to any tax question is it depends. Okay, now, did you move to a condo because of a job? For example, does the condo bring you at least 40 kilometers closer to your new job? If that's the case, then some of the moving costs that you have are tax deductible. Okay, they're under what's called the moving expenses deduction. But that's only, again, it's very strict criteria. You have to have moved because of your job, and it has to be at least 40 kilometers closer to your job. Okay, so within that range, it allowed you to move within 40 kilometers. Okay. Otherwise, unless you moved into the condo, so that's your principal residence. The only thing I would say is if you had a residence before you moved, then you have a capital gains transaction to declare, which is exempt. Remember that our personal homes are exempted from tax under the principal residence exemption. So if you sold the home to buy this condo, then the previous home, you have to declare it as a capital gains transaction, but you exempt yourself under the principal residence exemption. So that would be the only other thing I can think of just off the top of my head. The other things I can think of is maybe if you have a business, you could use a section of your condo for your home office, and then some of the expenses become deductible in your home, et cetera, et cetera. Again, it depends. There's a lot of possibilities there. Trish, if I have a T1135 to file and I can do it via NetFile, I no longer have to send it via mail any longer, right? Yes. If you're allowed, remember, it's a separate transmission. To be honest with you, I don't remember if a T1135 you could transmit it directly through UFile right now. I can't remember off the top of my head. But yes, if you can transmit it via NetFile, but it's a separate transmission, it doesn't go with the tax return. And my understanding is I'm not sure if UFile has that. I'm just going to go look real quick and see if the T1135 is transmittable. But my understanding is no. I think only on professional software you could do that. So let me go in there. I'm just going to go real quick And I think my understanding is no, you cannot transmit that through the software. I don't believe it's possible. I'll double check that and get back to you, Trish, on that one. But I'm pretty sure you can't. Unfortunately, I know with professional software, if you're going to prepare, you can transmit, but I'm not sure about consumer. I'll get back to you on that one. Sandra, I filed last Friday for my son using UFile. I've not received anything yet. Why? I received the email saying it was received. Why is it taking so long? Sandra, unfortunately, you'll have to call the CRA on that one. There's not much we could tell you offhand on that. We're not in control of the delays of your assessments. Okay, we don't know, essentially. Remember, right now, because of the pandemic right now, there's a lot of chaos going on right now in a lot of government departments. In theory, the CRA should not be chaotic right now because they should be used to peak seasons like this. Unlike Service Canada, where they're not used to getting that many employment insurance applications in one shot, CRA is used to this. But if it's taking that long, I would say, let me see, last Friday, so we are Thursday today. Yeah, you should be getting it any day now. Usually, you should allow for about 7 to 10 days before you get a response from the CRA. Hi again. Were you talking about the form T32A or something form, or is there a different form from each institution? Do they make their own? Thanks. Yeah, Ben, it's that one. It's the T. Yeah, I don't remember it off the top of my head. Your financial institution should know it. It's the same form regardless of your financial institution. But you got to go to the one that you made the contribution to cancel to do the refund of excess contributions. Okay. My friend has a spa. Okay, HOA. My friend has a spa that has to close due to COVID. Is there any support from the government for her business, not herself as self-employed? Well, there's two things that your friend can do. They can apply for what's called the CEWS, which is the wage subsidy, where if they want to subsidize their employees so they don't lose them, okay, they could continue paying their employees. They could apply for the CEWS, and the CEWS essentially is a 75% subsidy of the salaries of these employees. Okay, that's essentially what it is. And from there, your friend still has to find a way to essentially compensate for the 25%. Your friend has to show that he or she is doing whatever they can to supplement the 25% that the government is not subsidizing. Okay, so that's the number one. That's the Canada Emergency Wage Subsidy, the CEWS. If you guys want to learn about these things, okay, if you go to our website, which is ufile.ca, we have a blog, and we've written articles about all these benefits that have come out since COVID and all these announcements, including the new deadlines for the tax return. Okay, so if you go to ufile.ca, and then within the tabs at the top, you're going to see a tab or a menu called Tips and Tools. If you hover your mouse over Tips and Tools, you have UFile blog. Okay, and within the blog, we've written at length about these new benefits. So don't hesitate to go there and to inform yourself of this. Now, that's number one. The other thing they can do is also apply for an interest-free loan of up to $40,000 that the government is offering as well. I can't remember what I think it's Canada Emergency Business Loan, something along those lines. And they can apply for that and get about a $40,000 loan that is interest-free for 1 year and for which you don't have to make any repayments right away in the first year. And what they've announced, we still don't have all the details, but what they've announced is that they will also forgive a portion of the debt as well, up to almost 25%, okay, which is about $10,000 roughly if you go up to $40,000. Okay, so that's another thing your friend can do in the meantime to help out his or her business. Okay, Richard, I have 2 cataract eye surgeries. My extended health care will cover some of the 10,000 special lenses. And am I able to claim the portion not covered? Absolutely. You're allowed to claim it. It is an eligible medical expense. You're absolutely allowed to claim those expenses. Okay, you're absolutely allowed. So whatever the insurance does not cover, the excess amount, you plug it in as a medical expense, okay? Now remember also that your insurance that you pay to have that cataract surgery is also an eligible medical expense. So whatever you pay for the year to have medical insurance, that fee is also an eligible medical expense. Don't forget to include that. A lot of people forget that. They know the expenses, but they forget that the fee that I'm paying for to have insurance is eligible as well. That is a medical expense as well. So don't forget to put that in as well. Surely, I'm doing the rental income part, as you said, I could do last time, but I've gotten to where I have to declare class. I own a condo within a condo building and rent out my unit. What class would this be? Very simply, it's class 1. It's class 1 at 4%. There's 3 class 1s to choose from when you're choosing the CCA category for rental property. In your case, it's a class 1 at 4%. Simple as that. Okay, that would be the class that you would choose. Bonnie, my father passed away and I received the $2,500. First of all, my condolences, Bonnie, for your father. My father passed away and I received $2,500 death benefit, but used it to pay for his funeral. Now I have declared in my income. Is there any way to avoid this? There is one way. It's very technical though. Okay, you would probably need a tax specialist to do it for you. And that would be, instead of you declaring the income, you would allocate the income to the estate of your father. Okay, and you would have to create what's called a trust. Okay, but that becomes very complex because you have to create essentially a new legal entity in order to declare the income on the trust's return. And of course, the only income that the trust would have would be that $2,500, and the trust would not pay that much tax because the tax rates for the trust, when it's created from an estate, are the same rates as an individual, as what we pay, what you and me pay. Okay, so again, it becomes very complex, and probably with the lawyer fees and everything else that you would need in order to create that trust, it would not be worthwhile. Tax-wise, it might be, but administratively and cost-wise, it would not be. So unfortunately, your best bet right now is to basically, declare the income. There's really not much. Maybe if you, for example, try to see if this happened in 2020, try to see if you can still contribute to an RSP to level off that income, if it's possible. I know funerals are not cheap. I know that. I lost my father as well years back, and it was very expensive. The funeral fees were very expensive. Okay, so Ho again. Also, for an international student who came to Canada mid-year, do we have to select the option immigrate to Canada for the first tax filing? Again, the answer is it depends. Okay, and I'll always answer this. You'll hear me this. It's a cheesy joke, but it's actually the reality. Guys, every tax question depends on the conditions, depends on the facts. Okay, just because the student is physically in Canada does not make them a resident of Canada. Okay, so if the student is only here, okay, to just study, but their entire family is still in the other country, and that student, after they finish their degree, intends to go back to their country, well, the CRA does not consider this person a resident of Canada. Okay? They might consider them a deemed resident of Canada if they stay at least 6 months in the year. Okay? And then they will file pretty much like a resident. The only difference would be that if you're in the rest of Canada, with the exception of Quebec, you would not have any provincial tax to pay. You would have a surtax to pay. If you're in Quebec, you're treated like any other resident of Canada if you're a deemed resident. And what deemed resident means is somebody who's physically in Canada for at least 6 months in the year. Okay, which will likely happen to the student. But let's take an example of the student coming in September, and that student has no intention of creating any permanent residential ties to Canada. Okay, then at that point, that person is not a resident of Canada. They would have to file a non-resident return. Now, all of this, what I just gave as examples, all this I've explained in a blog post on the UFile's website. Again, if you go to ufile.ca, okay, we do have an option called studying abroad. Now, it's a little bit the opposite. Again, go to ufile.ca, tips and tricks, and then you go to UFile blog. We speak about people who have left Canada. But the first paragraph of what I say in that blog post, or what we say in that blog post, is relevant to your question, okay? Which essentially is you have to determine if that person is a resident based on their residency ties. And it's likely that for an international student, they're not necessarily considered residents because they don't have any intention of staying in Canada. Their families are still elsewhere, and they're intending on going back. So at that point, I would say read that article, read the first paragraph of that UFile blog article. Okay, it'll explain a lot, and it'll give you a link directly to the CRA site about residency and what the government considers as residency. Okay, so let's keep going. Okay, Trish. Yes, I've already done it separately. Okay, I think you were answering. Sandra, you're welcome. You're welcome. Thank you for asking a question. I worked federal election. I got a check for $300. I've been told I don't have to claim it as income. No T4 from them. No, that's wrong, Rick. Absolutely wrong. Where you're going to declare that is other employment income. Okay? So when you go into UFile, all right, and you go to the interview setup, when you go to the employment income section, okay, you simply make sure that you've ticked one of the boxes for employment income. Let me go there myself right now. So I will go into the interview setup. I will go to employment income. Okay, so I will tick the box that says employment income and employment insurance benefits. I will click next. And then when you're in the section called T4 and employment income on the left-hand panel, you will choose the option other employment income. That's what you will choose. And you will enter your $300 there. So it is taxable income. That's totally false. It is taxable income. Yevgen. We are a common law couple. My partner took a university teaching job in the U.S. starting in September 2019 while I still live in Montreal. She moved to the U.S. at that point. Can she file her federal and Quebec taxes for 2019 with UFile? And will UFile generate the departure tax return for her and all the necessary forms for this case? Okay, so if your spouse is considered an immigrant, somebody leaving from the country, okay, then yes, you can produce the immigrant return using UFile, and yes, I believe we do support the forms for the what's called departure tax, which would basically be the Deem disposition rules, in other words. So let me just double check that for you. I'm just going into the software now, and I'm just going to check that we have it in there. So if we go, here we go. So unfortunately, no. Okay, so we don't have the deemed disposition forms in the software. We do have, I believe, the T1151. I believe we do have that. And no, we don't have that either. No, so you could produce the immigrant return, but unfortunately, the T1151, the T1243, and the T1244, you would have to produce them separately. Okay, you have to go, for example, to the CRA site. They have what's called fillable forms, and then you could plug them in, and you could enter the transactions in UFile, and you could declare on UFile that you have an immigrant return. But unfortunately, the forms for the departure tax are not there, unfortunately. All right, let's keep going. Let me actually get some water. Wow, this is coming fast and furious. This is awesome. Great, guys. This is awesome. All right, so we moved from one city to another in 2018, but wasn't able to sell the first home until 2019 because of the slow market. Could the profit from the first home, first home, still be tax-free? Yes, it can be. The reason for that is that even though it took you another year to sell, remember that when you make the designation for principal residence, the government always adds a year to the number of years you actually resided in that home. Okay, so for example, if you resided in the home for 7 years, then your designation will be 7 plus 1, which will make it 8 years. So that should exempt your property specifically for these kind of reasons. That's why the government did this. Okay, for these kind of reasons, and for the fact that you're moving to another principal residence home for which you want to designate it as a principal residence as well. Because remember, in theory, you move in the same year, right? You would sell in 18 and you would move in 18. Okay, so that's why the government includes the plus 1. This specifically for that reason that they've done this. So it's very likely, yes, you will exempt that home for 2019 as well. Lloyd, where do I report data from foreign securities report? Is there a report the same as the realized gains or loss report? Okay, so the report, so the foreign securities report is on the T1135, and that's a requirement. Okay, so in other words, if the cost in Canadian dollars of your foreign assets that are not in the registered accounts, okay, so bank accounts, real estate, so on and so forth, if they go over $100,000 a year, the cost at one point in the year, okay, then at that point, you're required to file the T1135. And guys, do it, because the penalties are really stiff. Okay, if the government discovers that you have foreign assets of over $100,000 in cost, and they discover it, it's $25 penalty per month, up to $2,500 per year, and that's a penalty. That's not an income tax. It doesn't matter what you owe or if they owe you. You're paying that amount separately. Okay. So it's very important that you do that. Now, the software includes it, okay? UFile has that option for foreign reporting. So again, you go to the, I believe, actually, it could be in the identification or the CRA questions, sorry. You will go into the CRA questions, okay? So when you are in the left-hand menu of your interview screen, you will go to the CRA questions, and then you would have an option, a yes or no question of, do you own foreign property of over $100,000? So you choose yes, and the program will add that section to your left-hand menu, and you can go ahead and fill it in. Okay, so you know the software basically supports it. Okay, you can do that. All right, now is it the same as the realized gain or loss report? The answer is no. Your financial institution should be giving you another document that lists for you all the costs per month. And it'll literally be named the T1135. They're actually going to name it the form number that you normally have to file with a CRA. So look for that. It's not your realized gains or losses. It's not that one. All right, Monica, can we claim some of what we paid CRA of investment gains for the stock that went down so low from 40,000 to 4,000? Okay, excuse me. So Monica, I'm assuming you're talking about a capital loss. Okay, and the answer is, I'm not sure, Monica, if you could just be clear on that. Can we claim some of what we paid CRA investment gains for the stock? Okay, so I'm just going to make an assumption. Okay, so if you have capital losses right now, which is very likely a lot of us do, let's not kid ourselves with this pandemic, what's going on. It's likely that a lot of us have lost money in this case. You can carry back the loss. Okay, that you can do, and UFile supports it as well. You have a section in UFile to do it. Okay, so what it means is that when you declare the loss on the return, if you have capital gains in the 3 prior years, you're allowed to carry back those losses and use them up against your gains in the previous year. That's what I'm assuming you're talking about right now. You can do that. It's called the carryback. The form is the T1A, and the T1A is supported in UFile. So if I go to the interview setup, okay, and we go into investment income and expenses section, okay, you choose the capital gains, you tick the box next to capital gains, you click next, and then when you go to the capital gains section, okay, there should be an option there to carry back your losses from the previous year. Okay, should be within that particular area. Actually, I'm not finding it. I'm sorry. I might have gone to the wrong spot. Let me give you the proper way of doing it. So in this case, it would be losses. I'm sorry. You would go into the losses section. So in the interview setup, you'll go into the losses of other years and loss carryback. That's the section you would choose. And at that point, you take your losses, you carry them back to one of the 3 prior years. You can even split them up amongst the years as well. You have that option as well. All right. So Yana. Hi, are you able to see my question? Yes, Yana, well, I'm not sure. I didn't see, maybe it's below. I didn't see your first question, Yana. Just ask it again if you can. I'm sorry, I didn't see it. Michael, I have not filed my tax for 2017, 18, or 19. Can I use UFile to do this? Yes, absolutely. Your best bet would be to go online. I mean, you could also buy previous years for the Windows version if you want to. You have that option as well. Or you could go online and start with 2017 and then carry and then go move your way down to 2019. Absolutely, we support 10 years back from the current year. So we support up until 2009. No problem there. Okay, so if I can get a part-time job during a pandemic, does that mean I'm not able to get EI? Yeah, that would be something you would have to ask there for Service Canada. Again, my understanding, especially with the CRB, is that it's really for people who just don't have any income. It's people who have essentially lost their jobs, and they can't get back in. They can't find work right now. They need emergency funds right now. So if you're working part-time, then at that point, yes, it's likely that you would lose some of these benefits. At the very least, you lose a portion of them, at the very least, in this case. Okay, one of my friends has a startup company in Canada and works as CEO and living and teaching abroad. Can he still be a factual resident and pay taxes? Yeah, Hassan, the answer is yes. Again, remember, just because whether you are physically in Canada or not does not determine your residency. Believe it or not, it's actually, I say as a joke that the tax act basically defies the laws of physics, literally, because again, what the government will look at is does your friend still have links to Canada, or what they consider significant residential ties to Canada. Okay, so for example, where is your friend's spouse? Where is his or her children? Okay, where's their home? Where's their permanent home? These are questions that will determine the residency. So even if they're abroad working for a company, if the answer is to the questions that I just asked right now is they're all in Canada, guess what? They're factual residents of Canada. It doesn't matter whether they've left for 3-4 years. Okay, so that's really how you determine that. Okay, so you have to ask those questions. If you want to really get to the bottom of it, your best bet is go to the CRA website, okay, and type in residential ties, okay, in the search box of the CRA website, okay, and that should take you to an article that within the CRA website that will explain what I'm talking about right now, the significant residential ties. All right, let's keep going. Gary, regarding a business tax return, filing date is the 1st of June and payment date is 31st of August. What are the consequences if I pay the balance owing by 31st of August, but don't file until after June 1st? You know what, Gary, that's an excellent question. I'm going to be honest with you. I'm not entirely sure what the logic of the government was to do those two separate dates. Listen, according to the announcement, there are no penalties or interest, okay, if you pay by August 31st or September 1st. It depends on, which announcement came out. Okay, normally you pay penalties when you're late filing. That's when normally you have to pay. So my assumption here is that if you don't file by June 1st, you will have penalties, but you won't owe them until September 1st. But again, it's not clear. Okay, so I wouldn't take the chance, because logically that's what it should be. Okay, a penalty on the return is basically I haven't filed on time. Normally I pay penalties when I don't file by April 30th. That's when I pay my penalties. So it's a good question. It's an excellent question, and honestly, it stumps a lot of people here. I'm not sure. I'm not sure. To be honest with you, to me, again, they say no penalties or interest is what they say. Okay, for that. So at that point, in theory, you can file late and not have to pay any penalties. Okay, so delay of payment without interest or penalties is September 1st. That's what I'm reading here. But again, the deadline is June 1st. I wouldn't take a chance. File by June 1st. That's what I would do. Okay, and remember, you don't have to pay until August 31st anyways. Okay, so there's nothing stopping you from doing it. Okay, now your filing date, by the way, if it's a business tax return, sorry, I misunderstood there. If it's a business tax return, actually, you're still good till 15th of June, by the way. Your deadline is actually 15th of June, not the 1st of June. Okay, the new limit does not apply to you because you have a business, but the new deadline for the date for the amount owing is the 1st of September. Okay, that's what it is. All right. Okay, Sunny. My mom has a condo, but she passed away last September. I'm in the process of probate to sell the condo. CRA demands that the condo is deemed sold at my mom's death. So I file the mom's final return with the condo deemed sold as of September 2019. The question is, when the probate process is done and sell the condo, do I need to file a tax return for mom again after filing return, or does it need to be filed, or do need to be filed tax for it for the beneficiary? I'm assuming. How do I file the tax for the gain from 2019? Okay, so Sunny, I'll explain now. Okay, the CRA is absolutely right. the date of death, okay, of your mom becomes the effective date of disposition. And you fall under what's called the Deem disposition rules. Okay, that's essentially what that is. So as of the date of death, your mom sold the condo. Now, the good news is if your mom lived in the condo, now you're entitled to declare a principal residence designation, which means you can exempt the gain on your mom's return. Okay, so it won't be taxable on your mom's return. Now, once you sell in 2020, okay, then it is the beneficiary that has to declare the gain, okay, because it's now in the hands of the beneficiary. But remember, the consequence is not so bad. The reason being that when you declare the disposition as of September 2019, you have to your disposition amount is the fair market value of the property as of the day your mom died. That becomes the disposition amount. For the beneficiary, that becomes the cost. So let's take a simple example, okay? So the condo was $200,000. As of the date of death, it was worth $300,000. So when you declare the gain on the return, your cost for your mom is $200,000. The gain, the disposition is $300,000. According to the tax rules, the beneficiary has purchased the property at $300,000. That becomes the cost base for the beneficiary. When the beneficiary sells in 2020, it's very likely that the price has not increased that much since September 2019. So the gain is not going to be very big. Okay, the gain is not going to be huge. Okay, so at that point, there won't be a huge tax consequence for the beneficiary because you're inflating the cost, you're inflating the adjusted cost base of the beneficiary to the disposition amount of the mom as of the date of death. That's why, okay? So that's how that works. Okay, so Yevgen, I have joint accounts where I am the primary account holder. Are these accounts considered entirely mine for tax purposes? The answer is no. If you have, for example, a joint investment account, then any dividends or any interest that get paid from those accounts normally will be split evenly amongst the couple. Okay, that's how it works. Okay, so if it's a joint account, that's how it works. So any income earned has to be split amongst the couple. Okay? Question from Yana. Okay, is Airbnb considered rental income or self-employment income? Yana, that's the $1 million question. That's an excellent question. Again, the answer is it depends. It depends on the services you provide for the Airbnb. For example, do you provide laundry service? Do you make the beds? Do you cook for the person? Okay, that's there. If that's the case, then you would be more considered a hotel than a rental. And at that point, it becomes self-employment. Now, if all you're providing with the Airbnb, if all you're providing is purely room and board, and the rest is up to the person, is up to the customer, then it is purely a rental. Because all you're providing is access to a property. That's what a rental is. But if you provide services with that access, then yes, you might be considered a hotel service at that point, and then you might have you might be considered self-employed. Okay, I would call the CRA just in case and ask them the same question, but that's usually how it would work. All right, Yevgen. Are the rules by which Revenue Quebec determines residency for tax purposes the same as the CRA? Yes, identical. It's really the CRA that determines residency, and Quebec will follow. But the catch is, remember, first things first is you got to determine residency of the person nationally. So are they a resident of Canada or not? That's number one. Number two then is, okay, well, if they're a resident of Canada, are they considered a resident of a certain province? And that's where Quebec comes in. For example, take the example that I gave before with the international student. The international student that stayed over 6 months in Canada is considered, legally speaking, a deemed resident of Canada. Okay, that's what they're deemed. Okay, so they're a deemed resident of Canada. All right, so in Quebec, it's just like any other resident, just like anybody who lives in Quebec. I live in Quebec right now, and they would file a return exactly like mine. There would be no difference. Okay, there would be no difference in Quebec. But if they're in the rest of Canada, and they're considered a deemed resident, so any province other than Quebec, then there's no provincial tax to pay. they pay an equivalent to a provincial tax called the surtax. And the surtax, simply put, it's 48% of the federal tax that gets added as a provincial tax. Okay, and they will not be filing any provincial forms in that case. All right, Loming. Having filed income tax for 2018 using UFile, the tax return was adjusted after the CRA review. Should I go back to amend my 2018 entries? You could, yes. That would help you with the carry forwards, especially if you want to. Otherwise, you would have to manually change the carry forwards in 2019. So yeah, there's nothing wrong with going back to your old file and fixing it. And then at that point, simply carrying forward the file. Okay, Yevgen, regarding the joint accounts, the tax forms I got from financial institutions must be filed in only mine or my joint account holder's return. So can one of us then report 100% of the dividends and yield on one return? Not both. Okay, well, basically, Yevgen, you have to look at your T5 slip. It's likely you're going to have a T5 slip from the financial institution, and there's going to be what's called a beneficiary code. The beneficiary code is going to be 1 or 2, okay, because these slips should already be emitted by now, okay? You should already have them in hand. If it's code 1 and it's under your name, that means it's fully taxable on your return. If it's code 2 and under your name, that means your spouse has to claim 50% of that amount, okay? So you have to look at the slip itself. It's a T5 slip, and look for the box called the beneficiary code. Code 1, purely your income. Code 2, joint income. All right, so Sunny came back to add to his question. Continue with mom's condo. There are 2 beneficiaries. So when we sell the condo, how do we divide the condo and file between beneficiaries? Do we report as joint owners of condo and 50-50 and report the sale separately with 50% each? Yes. That's exactly what it is. If there were 2 beneficiaries, that means that the ownership is 50-50. And that means when you declare the transaction on the return, you have to declare 50% in one beneficiary, 50% in the other. Okay, that's essentially how it has to be declared. Yes. Okay, Yana, when a property changed from personal use to rental property, does the change of use deem dispose and need to pay tax? The answer is yes. That you fall under the change of use rules, okay? So that is a specific article, okay? So essentially the way it works is that the moment you change, so in your case, you change from personal use to rental property, okay? So there's 2 options here. You can either declare the deemed disposition the year of the change, declare the transaction, the capital gain, and then you start, continuing with your rental income, okay? Or what you can do is that you can make an election. And the election is the election under what's called subsection 45(2). So it's 45 bracket 2. So I'm just going to write it out in the chat. Okay, so you see what the law is. Okay, so I'm just writing it out so you guys could see it. And there you go. Okay, so it's ITA 45(2). Okay, that's essentially, I put it in the comments. All right, so under that election, which you have to submit a letter to the CRA. So it's simply a letter saying that you're electing under 45(2). Okay, you can defer declaring the deemed disposition up until the date that you actually sell the property. Okay, and what 45(2) allows you to do is that it allows you to essentially continue to consider, there's also other things that come with it, it allows you to continue to consider the property as a principal residence for the following 4 years after the change, even though you are in actuality renting the property. Okay, that's what 45(2) affords you. Okay, so it's a big election. All right, now, what I would say, in order to get the details that you need to understand how to do 45(2), go to the CRA website, okay, and in the search box, type in folio principal residence. Okay, so type in folio principal residence. And when you do that, it's going to take you to this document that the CRA has, and look up the election that I just posted on the comments, 45(2). And in that document, it's going to explain to you what to do, okay, in order to defer declaring the transaction of the deemed disposition in the year of change. So those are your options. Either you declare the deemed disposition, and you declare it on your tax return, but remember, you're allowed the principal residence designation. You lived in the property. It was your personal use. So you shouldn't have to pay any tax on that transaction because you lived in it before you changed the use. Okay? So you either declare the disposition or you don't declare it, but you have to submit a letter to the government electing under what's called subsection 45.2, where you elect to defer the transaction up until the date you actually sell the property to somebody else. Okay, and then, like I said, you could continue to consider you could designate then an extra 4 years for that property as a principal residence. To get more details, folio principal residence on the CRA site. It'll get you the details that you need. Okay, thank you, Shady, for the nice comment. Thank you very much. I really appreciate it. You're welcome, Yana. Michael, you're welcome as well. Thank you very much for the nice comment. Yevgen, could you please write in the chat the forms that are required to file with a CRA directly, additionally to doing the departure tax return with UFile? Are there any additional forms required by Revenue Quebec in that case? Yeah, there are actually, Yevgen. I don't remember the Quebec ones offhand. I'll write you the federal ones. So let me just write departure tax. I'll just write it out. Okay, so it's the T1243, T1161, and T1244. So those are the federal ones. Okay, so those are your forms. I'm just going to check 1 second. Let me see on the. Just give me 1 second. I'm just going to check what the provincial ones are for Quebec real quick. I don't want to take too much time because we don't have a lot of time left. We're doing about an hour, so we've got about 9 minutes left. Let's go here. Okay, just give me 1 second, everybody. You know what? I'll come back to it, Yevgen. We'll come back to you on it because it's going to take me a while to get to them, okay? I just want to be able to answer everybody's questions, all right? Okay, Sunny. If the beneficiary code for T3, T5 is 2, then can the higher income spouse claim all dividend income and the other spouse file interest income? Not directly. What you can do is you could transfer dividend income from one spouse to another. Okay, you can do that. And so, for example, you could take the dividend income from the lower income spouse and put it on the higher income spouse. You're allowed to do that federally. However, the condition is to do that kind of transfer, which, by the way, UFile will do automatically. By the way, this kind of optimization, UFile will handle automatically. There's nothing else to do. It's UFile that takes care of it. Okay? So the only way you could do this, the condition is that you have to be able to increase your spousal amount credit by doing the transfer. So in other words, by making the transfer, you've dropped your spouse's income to below $12,000. Okay? You've increased their income. That's the only way you could transfer the dividend income. Otherwise, no can do. Okay? If that condition is not there, each one has to claim whatever, it has to split the slip evenly down the middle. When will UFile develop a version of your software for Mac? Jeff, good question. I wish I could answer you right now. I wish I could give you an answer directly. As of right now, listen, we have online, because all you need is a browser to use the online version. I know that's the answer you probably got from us already. I'll definitely convey it to our programming team, but for now, unfortunately, we can't, unfortunately. Brian, how do I join this live session? Brian, you're already in it. I mean, I see you there. I see you there. Okay, can the T1 adjustment of my 2018 return tax online, and how? So yeah, I've already answered this question earlier. Okay, you could do it through the software, all right? So within the interview setup. So within the interview setup, you should have an option at the bottom in other topics called adjustment requests for a tax return. And you click next, and then the adjustment request section will appear in your left-hand menu on the left. Go in there and simply, make the changes that you need. What I would recommend if you want something faster, which I recommended earlier, is create an account with a CRA online portal or My Account. Go ahead and create a My Account portal with a CRA. Okay, go ahead and do that there. Okay, and you can make the adjustment online. and submit it online directly. Okay, that would be usually a faster way. You can't do all adjustments there, unfortunately, but it is a faster way of doing it. Okay, it is definitely faster to do it that way. All right. Okay, Sunny, thank you for you're welcome, Sunny. Can we have the session more before June 1st? Yes, I think you know what? It's very popular right now. I'm seeing a lot of people are catching on with this one, and I think, yeah, we will continue it. I think there's definitely a demand for it, and I think we will do some more sessions like this. It's great. I mean, it's great to be able to ask somebody these questions, ask them directly and get direct answers, to these questions. Taxation is quite muddy sometimes. Let's not kid ourselves. And it's nice to have somebody who could, really answer those kind of questions. So guys, I've got about 5 minutes. If you have any other questions, now's the time. You got 5 minutes. I'm just going to take my water, take a breather. A lot of questions. It's great. I love this. It's awesome. So I'm waiting now for more questions. Okay, so do I need to send copies? So Brian is asking a question again. Do I need to send copies to prove for my T1 adjustment online? Did you say, okay, so I'm assuming, Brian, you sent them already. No, you shouldn't have to. If it's online, they should be in process right now. You shouldn't have to submit any paper documents at all. So, okay, so give me a second so I could do the Quebec immigrant one. Let me see if I could get you to those forms and give you what the equivalent form is. Okay, so I've got one TP. Let's go back here. So TP 1033.2. That's one of them. Let's go. I saw the question. Don't worry about it. I'll get to the question now. I'll go a little bit over and get to the question. And let me just go to now the other. Let's see here. So capital gains. So I'm just going to the professional product and just getting to my answer real quick. Okay, so just give me a second, guys. I'm just I'll go a little bit over and answer everybody's question. Yeah, no, I can't find the other one. I'm gonna post one of them for now. I've already got one of them here. Okay, so there's one of them. And for the other ones, let me go here. Okay, let's see here. Okay, so for Quebec, yeah, okay, so I got that one. T12, let's see here. Is it .a? Just give me a second, guys. Don't worry, I'm going to go a little bit over so I could answer any questions that are coming in now. Just give me 1 second so I could get to the answer. Okay, yeah. So there you go. So you would have. Okay, so another one there would be. Okay, so it would be. Let's go here. Let's go to TP 1033.a is another one, and then I'll get to the other ones. Okay, let me just answer a few questions here. I'll go a little bit over. For Condo, etc. Okay, recapture. Okay, for Condo, she was in the nursing home. Is it still qualified as a principal residence? No. No, Sonny, you should have given me that. Sonny, you should have given me that information from the beginning. Now, remember when I say the answer to every tax question is it depends on the facts? There you go. The answer is no. That's basically nursing home is not necessarily that's normally a rental a rental. So that's what it is. Okay, I just opened a TFSA to buy a few shares. Will I get T-slips for this? The answer is no. There's no T-slips for TFSA because anything you make on the TFSA is tax-free. Completely. There's nothing to declare on your return. It is tax-free. Therefore, you have no slips for the TFSA. Absolutely nothing. Hi, Victoria. I don't know if you have any questions. You got about a minute to ask me any question you would like. Brian, I have always done this pension split every year. However, when I've done it in my 2019, UFile software did not automatically do the splits for me. Why? It depends. Again, the answer is always it depends. It depends on the situation that you have. Maybe there's an erroneous entry. My suggestion to you is to contact our support line. Okay, this is a very direct question. Pension income splitting, I can't answer off the top of my head for something like pension income splitting because there's so many variables that could affect the calculation. So I would recommend strongly that you check with our support staff. Okay, and it's likely they'll ask you to send the file. Okay, so, all right, let's see if you've got any other questions there. Okay, so yeah, I think Yana has another question. I'm just checking for the last form for that Quebec thing, because I'm missing one, I believe. So let's go here, and there we go. We got the last one. There it is. So TP. So, okay, so Yana, we'll get to your question now, although I don't see it. 785, just give me a second. I'm just going to post the form. Excuse me. 2.5. And there's the last one. Okay, so that's the last one there. Okay. Okay, so yeah, no problem, Yevgen, no problem. Okay, I think you asked the question too that I missed. How are the additional forms part of the departure tax sent to the CRA Review Quebec, by mail or electronically? How should be sending be times UFile filing? Okay, so yeah, Yevgen, the return itself is not eligible for net file. So even the return that you're producing with UFile, you won't be able to net file anyway. So what you're going to do is you're going to include those forms with the other forms that you have to mail to the CRA and to Revenue Quebec, because they fall under net file exclusions. You have to file them by mail. Okay, that's the answer to that question. Okay, so you include it with the return that you're going to print out using UFile. It's just going to be additional forms in the return. Okay, recapture. Oh, there you go. Okay, recapture. Okay, sorry, Yana, I just saw it now. Recapture CCA is treated income or capital gain on the year of disposition. It's income. It's not capital gain. So if you have a recapture of capital cost allowance, meaning that you had a property that you were depreciating over the years, you sell the property at a profit. When that happens, well, the government just gave you an expense, just allowed you to deduct an expense for a property that appreciated in value instead of depreciating in value. So because of that, whatever amount that you claimed as an expense, as a deduction for your capital cost allowance, becomes income either on your rental or on your business, depending on where you were depreciating that property. Okay, so it is purely income. It'll be either business income or rental income, depending on what you have. Bought in 2012, lived until November 2017, and died September 2019. How do I file? Okay, well then it's a principal residence. So obviously she didn't live there. She lived in the residence between 2017 and 2019, Sunny. So at that point, that means you're declaring a principal residence between 2012 and 2017. Those are the years you will designate as a principal residence. Okay, that's essentially what that means. And you'll have a taxable capital gain for the 2 years that she was in residence. Okay, that's what's going to happen. Okay, so you still declare the capital gains transaction like you normally would, but then you designate 12 to 17 as a principal residence. And you can do that in the software very easily. Okay, within the same section, within where you enter the capital gains, within the same section. So I may have to do a T1 adjustment once I got the notice of assessment of my 2019. How often do this kind of UFile live sessions? How do I know to join? Yeah, I mean, we'll publicize a little bit more. We had just sent an email this time around, but for the future UFile lives, we're going to post it on the actual Facebook page. Okay, so if you go to our Facebook page or on Twitter, or if you follow us on Twitter, we're going to post the next live session there. Okay, we're going to tell you the date ahead of time. That way you guys can come on board and ask me questions again. Okay, you can ask me whatever questions you would like. So we'll conclude it with Brian. Brian, I'm just trying to remember again your question. What's called that? You know what? I would check with the CRA. Call them up. I don't know why they're taking so long. If you did an online adjustment, it should have been quick. It should have been done in a couple of weeks at worst. So I would call them. I would contact the CRA directly and see what's going on. Okay, that's what I would do. Okay, so I think that about covers our time. And that's it. All right, this was great, guys. This is awesome. This is awesome. We will definitely do this again. Okay, so we will definitely do this again. So we'll definitely do this again. Brian, that's true. Right now they're having issues right now as far as getting through, because remember their call centers are closed basically. So I don't know. See, the difference with our call center is that we work from home remotely. All of us are working from home remotely. I'm not sure what the CRA has done, but we'll see. I'm not sure. Thank you very much, everybody. Thank you so much. Thank you for the kind words. Okay, so guys, we'll conclude it here. Thank you all for attending. Okay, and again, everybody, stay safe, stay sound, stay with your families. Okay, stay home. Okay, until the government tells us to move out, do not go anywhere. Stay safely home. Okay, don't take chances with this kind of thing. This is unprecedented times. Do not take any chances. And hopefully you guys stay safe and sound. Take care, everybody. Have a very good day.